And now, live from the Macon studios of News Talk 940 WMAC, it's Your Money.
Good morning, Middle Georgia. Welcome to Your Money. We got Randy and Sherri Goss with Rosenberg Financial Group. And as financial advisors, the main thing that we do is provide retirement planning and advice for and manage our clients' investment accounts. If you're looking for a financial advisor, please contact our office to set up your complimentary consultation. Our office number is 478-922-8100, and we have offices in Macon and Warner Robins for your convenience. To find out more about us, visit our website, retirerelax.com, where you can read a number of special reports and listen to past radio show broadcasts. And you can also sign up to receive our digital feeds, which provide great information on various subjects in a short video format. We also offer free seminars to the community, so if you're looking for a guest speaker, please give us a call and we'll get you connected with Sherri. If you'd like to call in today, the number is 478-742-0940. And as always, you can send me an email to randy@rfmoney.com, and we'll cover your question in a future broadcast.
So I'm excited because I'm speaking at a women's conference today at noon at a local church, and I don't charge for this. And my topic today is cybersecurity for seniors, and so I want to also promote. I'm going to be involved in this Houston Healthcare Cybersecurity Awareness Forum. It's going to happen on November 16th at 6:30 p.m. at the Carrie Martin Conference Center, which is 233 North Houston Road. It's the old mall, where Houston Healthcare has a lot of Educare, and all the seminars that they do are all out there. Anyways, so if you have questions about that, or you want me to send you the flyer, you can email me at Sherri, Sherri, at rfmoney.com, and I'll forward the flyer to you so that you can pass it around and encourage people to attend. There's going to be some extremely smart people from Houston Healthcare that are in charge of cyber for the hospital, which is... Hospitals are under attack, and I don't know why they're being picked out of all the herd of everything, but like I mentioned, I think a couple of weekends ago, that I was hacked after I got my mammogram. Hospital was hacked. They got my information, so I got a letter in the mail that said, you need to sign up for protection for the next 2 years and identity theft protection, so I did. So don't ignore stuff like that. If you get a letter in the mail saying that somewhere you went to the hospital for something, or a dentist or whatever, and your information has been compromised, follow the instructions and make sure you do that to protect your credit. Or if you don't need to use credit anymore, just shut your credit down. And I would say one other thing about this. So have we mentioned about Jonathan's son being hacked? Have we talked about that on the radio show?
I don't think so.
I don't think so either. So our brand new advisor comes in a few weeks ago, and it turns out somebody got access to his son, who's only 15, personal information, and they've gone out and opened accounts in their name under him, as him. And so Jonathan's having to go down the rabbit hole now of shutting down the credit for all of his kids. It's a hassle if you're already in the process of being hacked. Minors are a good target for cyber thieves because no one's checking their credit reports, and they can run up thousands of dollars worth of debt. You have no idea before that person even applies for their own credit card. I had a guy that was in college, and he came to me after he graduated because he was applying for jobs, and nobody would even talk to him. And he finally found out that he had been hacked, and his credit was ruined, and they were looking at his credit report as part of his job interview. And if you work on the base, and you've got a security clearance that is tied to your job, you need to make sure that you take really good steps to protect your identity, because if they ruin your credit, and it could possibly get to your career. So you got to be careful. Yeah, it's a big deal. But the other thing too, Sherri, is that even if you think you know a lot about cyber, there's a lot that you don't know. And I was just looking this morning. There are 17 different types of phishing. PHISHING. So there's a ton. So that if you have the time, please attend these seminars, because you're going to learn things that you just don't know. And it's nice to stay abreast of this kind of information because it does directly affect you. And what I suggested that Houston Healthcare do, and I think they're going to do this, is the person that's running this program is going to have something where you could subscribe. Like if you attend this, you could subscribe to her feed, and once a month she could send out a tip, because this thing is only going to get deeper and wider and worse. It is not going to get better anytime soon, as far as I can see, because we just don't have the implements in place to stop it all. We're reacting to it. So eventually, hopefully, we get our heads around all of this. But for now, you just need to learn as much as you can And I have a whole handout from the seminar that I'm doing today, and I'd be happy to email that to you. If you can't attend this other program, email me, Sherri@rfmoney.com, and I'll send you the handout. And actually, you can go on our website. You don't have to call me. You can go on our website, retirerelax.com, and go to special reports, and then scroll all the way to the bottom right, cybersecurity handout. That will help you tremendously if you've never gone down this rabbit hole.
Yep.
Anywho.
All right.
So, it's been a couple of rough weeks in the market, despite all the good data that's coming out of the move out of stocks. The move out of stocks picked up steam this week as investors moved more money to the high-paying bonds. Plus, the high yields also make borrowing more expensive for companies and households across the economy, which can hurt corporate profits. But why have yields gone up so much and so quickly? It's probably because investors are increasingly taking the Fed at its word that it will keep its main interest rate high for a long time to drive down inflation. The Fed has already yanked its Fed funds rate to the highest level since 2001. And it indicated last month it may keep the rate higher in 2024 than it earlier expected.
Yeah, Fed Governor Bowman said in a speech Monday that she expects it will likely be appropriate to raise the rates further and hold them at a restrictive level for some time. And restrictive is what the Fed officials call high enough rates to slow the overall economy.
So I was looking at some charts yesterday, and despite the volatility, the S&P 500 is still up for the year. In January 2023, the S&P began the year at 38.24, closed Friday at 41.37, so it's up a little bit for the year, but it's year over year, it's just up over like 100 points. The Dow, on the other hand, has given up over 2,300 points and is now basically flat for the year. The NASDAQ has been the biggest winner, rising 2,753 points since January. The Federal Reserve's preferred measure of inflation, the price index for core personal consumption expenditures, fell to an annual rate of 3.7% in September, but we will talk more about that in just a few minutes.
Yep. All right, but let's start with something a little more positive. Walmart conducted another marketing event where the U.S. businesses could pitch their products. Mike Rose, star of TV show Dirty Jobs, and Governor Sarah Huckabee Sanders were in attendance to kick off the Walmart's 10th open call event.
I've never heard of this, and I had no idea they did this, but
yeah.
It's like that Shark Tank show.
It is. The annual gathering brings small business owners from across the country to Bentonville, Arkansas to pitch products directly to buyers. The products pitch could end up on the shelves at Walmart, Sam's Club stores, Walmart.com, or at the Walmart Marketplace. Walmart estimates it planned investments of $350 billion through 2030 on items made, grown, or assembled in the United States will help generate over 750,000 jobs nationwide. So, if you're an entrepreneur, you should take note. And here's how it works. Each company that is selected to attend, which can be in person or a video, gets a 30-minute time slot to pitch their ideas and products, often to teams of buyers.
About 1,000 meetings are scheduled, as some businesses may have more than one product, and some will leave the meeting with a deal to sell their product through the retailer, basically their version of a golden ticket.
Yep. Last year, businesses pitched products from scented candles to cosmetics, from plastic flag holders to on-the-go period kits. The intrigue, not all products that the company buys will sell in stores. Some of our interest to regional customers or the quantity a vendor is able to produce may be limited. Walmart provided a day of programming to help the small business owners get comfortable with the home office and be prepared for their meetings the next day.
Between the lines, buyers expect to see a lot of food and pet products at this year's open call, said Jason Firmstead, Senior VP of Supply Development and Sourcing for Walmart International. He gave 2 simple pieces of advice for those heading into pitch meetings. 1, tell the buyer what's special about your product and focus on differentiators. 2, be realistic about your ability to deliver. Don't overcommit.
Right.
And I could see people saying, oh, yeah, I could crank out 100,000 of these by March. You know, don't do that and then fail and then look stupid.
That's right. The bottom line, even if an entrepreneur doesn't land a deal at that event, they're leaving with contacts at Walmart and some ideas that they will, what they need to do to improve their products in the future. And we don't have any more details on what we've got, but we don't have any ideas or details on how to get an initial invitation, but I'm sure you could check out the Walmart corporate page for details on the next event. But I think it's very exciting.
It's very exciting. I wish I could watch some of it. It'd be fun. It'd be a fun TV show to just watch the people go in and see how they pitch their stuff and whether they like it or not. And to have 30 minutes and they're going to decide whether they like something or not is staggering to me. I mean, you'd have to be an expert. You'd have to carve these people out into tranches of electronics, toys, clothing, cosmetics. You have to have all these, and then have an expert from the buying side of Walmart in these meetings listening to these pitches. But I'd be fascinated to see how they pick and what they pick.
Yep.
And Walmart is amazing to me. I can go in there. I mean, that's where I buy my makeup. That's where I bought my groceries yesterday. I mean, they had every single thing on my shopping list yesterday.
Yeah.
I checked out, self-checkout. Lady was really nice. And I told her, I said, I can't believe I found everything on my list. And I was in and out of there in like 30 minutes. It was phenomenal. So you criticize it all if you want. It's trashy clothes, whatever. But it serves a purpose for people on all levels of the economy.
That's right.
And it's so easy. I don't know. I appreciate what they do for the community, honestly. And I don't care if they make a lot of money. Anyways, sorry. Jamie Dimon rips central banks for being 100% dead wrong on economic forecasts. And this is a guy I really like and I pay attention to. J.P. Morgan Chase CEO Jamie Dimon on Tuesday warned about the dangers of locking in an outlook about the economy, particularly considering the poor recent track record of central banks with the Federal Reserve. In the latest of multiple warnings about what lies ahead from the head of the largest U.S. bank by assets, he cautioned that myriad factors playing out now may make things even more difficult. Prepare for possibilities and probabilities, not calling one course of action, since I've never seen anyone call it, Dimon said during a panel discussion at the Future Investment Initiative Summit in Riyadh, Saudi Arabia. I want to point out that the central banks 18 months ago were 100% dead wrong, he added. I would be quite cautious about what might happen next year. The comments reference back to the Fed outlook in early 2022 and for much of the previous year, when central bank officials insisted that the inflation surge would be transitory.
Yeah, and I think that's one word they wish they had never uttered.
Right? Along with the misdiagnosis on prices, Fed officials, according to projections released in March 2022, projected their key interest rate rising to just 2.8% by the end of 2023. Well, now it is sitting north of 5.25%, and core inflation is at 2.8%. 1.1 percentage points below its current level as measured by the central bank's preferred gauge. Dimon criticized this omnipotent feeling that central banks and governments can manage through all this stuff. I'm cautious, he said.
And much of Wall Street has been focused on whether the Fed might enact another quarter percentage point rate hike before the end of this year. And that is in part why the fear and greed index is hovering near the extreme fear side of the index.
Yeah, we don't need them to do that. We need them to stop.
We need to, at least pause and let the data catch up to them.
Yes.
So, anyway, let's see here. But what can the Fed do about the deficit? Probably nothing. As deficits fuel high-rising bond yields, Fed Chairman Powell resists the urge to offer fiscal advice in contrast to 2020. Federal Reserve officials say soaring long-term bond yields are key factors in the economic outlook and their interest rate decisions. They will also say that the swelling deficits is one reason yields are rising.
What the Fed won't say is that political leaders should therefore do something about the deficit.
Yep.
I don't understand this.
Fed Chair Powell said that the Fed does not comment on fiscal policy during a speech last week. He went on to say that that being the Fed, know that the nation is on an unsustainable fiscal path. But it appears that Powell has a selective memory because in 2020, when the pandemic lockdowns tipped the country into a sharp and severe contraction, Powell had a lot to say about the policy. After Congress passed and then Donald Trump signed the $2.2 trillion CARES Act, Powell repeatedly called for more stimulus, saying, "This is the time to use the great fiscal power of the United States to do what we can do to support the economy." Powell kept up his support through the fall of 2020, and while he didn't explicitly back President Biden's $1.9 trillion American Rescue Plan in early 2021, he did play down concerns that inflation could result. His call for more fiscal support was, at the time, well-founded. The early 2020 lockdowns represented an unprecedented calamity. At that time, the Fed had already cut short-term interest rates to near zero and was buying bonds to push down the long-term rates, as fiscal policy was the only lever left to support the economy. Nonetheless, Powell's outspoken support for the fiscal stimulus then is awkward now for two reasons. First, given how strong the recovery and the inflation turned out to be, much of the extra stimulus was unneeded and maybe counterproductive. Second, it stands in contrast to his silence today, a silence some wish he would break. In 2020, Powell felt the need of his comments for the nation, that he had to weigh in on the fiscal policy, stating that he felt that the need had risen again, but on the other side of the ledger, debt and spending.
And considering that Biden and Trump will likely be the major parties' presidential contestants, and neither of them are promising to do anything about our debt, that's 5 more years of this.
I know.
The Fed chair needs to speak up and be the voice of reason. Our politicians need a wake-up call, and there is no better pulpit to get their attention than the Fed's.
Right. The deficit is far from the disaster the pandemic was in 2020, but the threat is real. The gap in the fiscal year ending September 30th, adjusted for student loan-related accounting, hit $2 trillion, or 7.5% of the GDP, a record outside of war, recession, or other national emergency, and there's no prospect of it coming down meaningfully. The resulting supply of Treasury securities caught investors by surprise, I believe.
During our annual conference this week, one of the speakers noted that the elevated deficits are something we will continue to see for another decade. I believe the data he referenced comes from the U.S. Budget Office. And
rising bond yields, though partially due to deficits, have also had destabilizing spillovers into the markets. They have reduced the values of banks' bonds holdings, eroding bank solvency, and because Treasuries are the world's de facto benchmark security, the higher yields have pushed up the rates in other countries as well. And while the Fed can't argue that the lower deficit is necessary to stave off imminent crisis, it can certainly point out that it would make it easier to get inflation back down to 2% target rate. And yet, for all the reasons Powell might want lawmakers to act on the deficit, he also has reasons to keep quiet. For starters, the implications for monetary policy are a bit more counterintuitive. Normally, a bigger deficit stimulates growth and causes the Fed to tighten monetary policy. But the latest run-up in yields doesn't reflect higher expected growth, but a higher term premium. And the added return investors demand to hold longer-term bonds instead of shorter-term Treasury bills.
That higher-term premium is a restraint on borrowing and spending now. As Richard Clarita, a former vice chair, put it, your past fiscal excesses show up as a headwind today. In other words, the bond sell-off is giving the Fed an added reason not to raise interest rates, not exactly an incentive for Washington to quit borrowing. Then there is the risk that if Powell has skin in the fiscal game, critics read ulterior motives into his actions. In 1990, the Fed, under Chairman Alan Greenspan, cut rates after then President George H.W. Bush and Congress reached a deficit deal. Since then, the Fed has generally avoided so explicit a link between monetary and fiscal policy.
Yeah, which hasn't prevented suspicion of one. A decade ago under Chair Bernanke, the Fed bought bonds, dubbed quantitative easing, to support growth and nudge up the too low inflation. Republicans, including Ryan, accused him of bailing out President Obama's deficits. The Fed is now getting rid of those bonds as part of the campaign to get inflation down, which is quantitative tightening. Would Democrats accuse Powell of doing such? Would Democrats accuse Powell of doing so to punish congressional wastefulness? Finally, the Fed should put its reputation on the line only if it has a chance of accomplishing something. In the early 1990s, Congress was less polarized and presidents were more willing to make hard choices on the debt.
Today, the parties are so polarized that they only listen to views they already agree with.
That's right.
Both oppose fixing Social Security or Medicare, the two biggest spending programs, or raising taxes on most Americans. But I'm sure that raising taxes is higher on their list than fixing Social Security or Medicare. Mm-hmm. I mean, I don't know how nobody is talking about the fact that those programs are going broke, and we have more debt that we're paying on because of the money that we've thrown around the last few years. And somebody needs to get serious.
And I think they get it, but I think that they're so divided on everything. They can't talk about what they have for lunch, it seems like, without fighting. So they need to just do what we paid them to do.
Right. They have a job.
That's right.
Anyways, so totally different subject. If you're paying more for car insurance this year, you are not alone. Consumers across the country are getting a shock when they get their policy renewal notice. Car insurance costs vary based on location, demographics, number of car accidents, type of vehicle, and other factors, but insurance rates are up steeply for most drivers this year. I had 2 calls about this just last week. Shocked by a spike in car insurance rates, the calls that I had, in fact, their rates went up 4 times. 4 times what they were paying. And they were just freaking out because now it's all of a sudden a budget line item that didn't used to really be a big deal. Anyways, here are 9 ways that you can lower your rates. According to the... According to the 2023 U.S. Auto Insurance Study from J.D. Power, 31% of car insurance companies operating in the U.S. enacted a rate increase this past year. Overall, the industry reported an average price increase of 15.5%, with some states like Florida seeing rates rise as much as 88% over the past year. And I know we've mentioned this in the past, but we're going to go deeper into it this time. The U.S. Bureau of Labor Statistics Consumer Price Index confirms that even as inflation eased in 2023, auto insurance costs rose more than 17% for U.S. drivers. Progressive Insurance estimates its average cost of car insurance for a liability-only policy ranges from $81 to $146 a month. But you might pay far more than that, depending on your coverage, driver demographics, vehicle value, and which state you live in.
All right, so let's talk about these 9 different ways to save on auto insurance premiums. First is assess the coverage you need. The coverage types and the levels you're carrying now might not fit the situation anymore. Determine how much car insurance you need. Consider important factors such as your net worth, your risk tolerance, and how much you have in emergency savings, the drivers on your policy, and more to choose the coverage that's just right for your situation. And I think your insurance agent is a good place to start. They can ask you a whole bunch of questions you might not even think about.
The other thing that I don't think this article covers that just occurred to me is when you retire and you're not commuting to work, you're driving your car less.
Oh, I know that every now and then we do get a survey that I fill out that talks about how many miles per year we drive.
Because I used to put a ton of miles on my Honda, and I hardly do any anymore.
Yeah,
so
that's right. That's a good point, though.
Yeah, and I hope everybody's paying attention to that. I don't know if all car insurers are doing what ours is doing as far as giving surveys and asking. I remember when your mom quit, when she retired, hers didn't change, and then somebody at church told her about it, and she called, and they're like, oh, yeah, if you're not driving to work anymore, then you get a discount.
Yeah, but see, Mom only worked a half mile from the office.
Maybe hers was her age.
Maybe.
When she was 65, she got a discount, and they didn't do it automatically. She had to tell them.
I think that's more like it.
You think they had her age in the system. Anyway.
You would think.
Go ahead.
The second one is keep or work towards a clean driving record. Some factors that affect auto insurance prices, like age or gender, aren't always in your control, but a careless at-fault accident or a speeding ticket can lead to a rate increase from your insurer. Now, while we're on this about the tickets, you've got those. No, I'm not going to talk about you.
No, I got one. I didn't know I was in a school zone. I didn't know it was that time of day. I was just trying to get back to the office from Macon.
Yeah.
And I'm buzzing down this road, and then we get this stupid thing in the mail.
Yeah.
I want to scream.
And I'm going to leave the word here. It's really funny because it's a very clear shot of the entire car, okay? And she goes, but I was going with traffic. And so the ladies in the office, I said, y'all come here, let's count the cars in this. And so we got to 1. And that's as far as we could get because you were the only car on the road.
Which means I probably wasn't in the school zone.
You were.
I think they've extended the school zone another mile. I think it's a scam. I'm going to drive back down that road and see where those signs are.
We did, actually.
Go.
I showed you. But anyway. But look,
I'm just kind of stuck on math.
I wasn't going to go down. Yeah, you are. I wasn't going to go down that road.
$75.
No, it was 80. So.
Oh, shut up.
But the point I was wanting to make about those traffic cameras is they don't hit your, if you do get one of those tickets, you'll notice that it is signed by a police officer at the bottom now. And so it makes
Who wasn't there.
Right, but that doesn't matter. But the point I'm getting at is that if you pay that ticket, it does not go on the points for your driver's license. So
Thank God.
That's a bonus at least. So anyway,
look at it as a charitable donation.
Why's your face so red?
So here's another one. Choose a cheaper car. So my Honda was about $20,000. That helps a lot when you buy a car and then you drive it a long time and it's not an expensive car. Anyways, you should always contact your insurance agent before you start vehicle shopping. Call your agent before you purchase a new car. Some cars are less expensive to insure. Ask in advance about what an estimate of the premium might be. This is really important now. Here are the 5 vehicles that top Mercury Insurance's 2023 list of the cheapest new cars to insure. A Chevy Spark. I don't even know what that is.
Shelby had one of those in Colorado, and we hated it.
Mazda 2.
Yep.
Is that just a regular car?
No, just a regular little sedan. It's a
VW
car.
Golf.
Which I like.
They've been around forever. A Hyundai Accent.
Which I like.
Okay. Toyota Prius Prime, or you could just drive your car longer.
That's right.
Shop around to save on insurance. If you've been with the same company for a while, shop around for new car insurance quotes on a yearly basis. You can also consult with an independent insurance agent to see which insurer might be the best fit for your family or fleet of vehicles. This is a topic that I find interesting. Some people I know will only use one insurer. When I ask why they don't shop for better prices, if for no other reason, just to know you have the best value. When I say value as compared to price, I mean, is the premium I am paying best for my circumstances? I then add back the intangible items like ease of doing business with a company, customer response times, there's a repeated thing there, and just generally responsiveness means a lot to me. It makes getting answers a lot easier, and that is worth a premium. Do you know of anybody that would be an independent agent that would quote? I think the only way to do that is to go online and look at car insurance.
You know, I didn't look that up.
Yeah, I would think that's the only way to do it. And I'll tell you, I just had a client. She was in a car wreck, and she just got $50,000 out to buy a new car. And I can't imagine what her premiums are going to be compared to the old car that she was driving.
And it wasn't her fault either, but it could bite her.
Yeah, right.
Yeah. All right. The next thing is consider telematics. First, you might find it useful to know what telematics is. It's a technology that combines telecommunications and information processing to monitor and track vehicles, their equipment and other assets using GPS technology and onboard diagnostics. Most insurance companies now offer discounts through usage-based insurance. Drivers download an app or install a plug-in device that monitors the mileage, driving habits, speed, and more. According to TransUnion, the uses of telematics surged 33% in early 2022 as inflation drove drivers to seek out deeper discounts in car insurance.
I've never heard of this until now. We need to call.
There's an OBD port under the dashes, which is where you can plug in diagnostics tools like at the auto shop to find out what's going wrong in your car. You can plug the module into that, and it monitors everything that your car does. How fast you take off, how fast you brake, you know.
So, and then that's tied into your insurance company?
Yep, they take a look at it, and they can adjust your insurance periodically based on the data.
I'm not sure I want that device.
Yeah, one more thing to say. Yeah, you were speeding at school zone.
Oh, brother.
All right. The next one is maximize insurance discounts. Insurance companies offer a full menu of discounts, and it can be difficult to determine if you're taking advantage of everything you're eligible for. Ask about student discounts, senior discounts, military and veteran discounts, and any discounts for safe driving. And you might even consider taking a defensive driving course or enroll in traffic school. So, next one is bundle your renters and homeowners insurance. There's a lot of options when it comes to auto insurance and reducing rates right now. Consider bundling your coverage with the same company for home and auto for a bigger discount. So,
work to raise your credit score. That's right. Your credit score has a lot to do with your insurance rates. Insurance companies use a credit-based insurance score, CBIS, in their underwriting process to determine insurance rates. Making bill payments on time, paying down debt, and using credit cards responsibly will all improve your credit score and deem you a less risky person to insure. Avoid reducing your coverage. You could try to raise your deductible or drop extra coverage, but carrying the minimum coverage on your vehicle that the state will allow is almost never advisable. Instead, try creative solutions to save money and reduce your insurance premiums, like enrolling in paperless billing or paying annually. Take the highest deductible you can afford that makes sense, but be mindful that at some point the savings does not justify the additional increase in a deductible.
Right, and if you have a higher deductible, make sure you've got that emergency savings set aside so that if you do have the incident, you're not upside down.
Experts say rising car insurance premiums are a result of several factors converging over the past few years to create steep losses for insurance companies and thus a steep increase in insurance rates.
Yeah, the first is high repair costs. This is due to rising auto part prices, aging vehicles, supply chain concerns, and labor shortages. Similar to auto insurance rate hikes, the Consumer Price Report shows the cost of vehicle maintenance and repairs rose about 20% for most customers in 2023.
Next are the many natural disasters and severe weather have generated more claims for larger payouts. These types of catastrophic claims affect both auto and home insurance rates. State Farm, one of the largest insurers in the U.S., received permission to institute more than a 65% rate hike across 29 different states in early 2023 due to extraordinary losses. Next is the rise in used car prices, which can significantly affect the cost of coverage. Edmunds report that used vehicle prices remain historically high with an average increase in value of 44% since 2018. increase in severity of insurance claims. Now that most cars have returned to the road post-pandemic, so too have more accidents. According to a State Farm media release in early 2023, the company attributes its unprecedented $13.2 billion underwriting loss in 2022 to the increased severity of auto insurance claims. It really is a convergence of factors, including rising insurer losses due to increased accident frequency and severity, she said. There are also more fatalities and injuries on the road, leading to an increased attorney involvement in claims, which is a disaster for them. These are all good tips. Insurance is not cheap right now, and it appears it could get worse. So take the time to do some comparative shopping. After all, this is your money we are talking about.
Yep. So those are all good tips, Sherri. All right, let's see. California, talking about insurance liability here. California DMV halts cruises self-driving robotaxis statewide. The California Department of Motor Vehicles has yanked Cruise's permit to operate as autonomous vehicles across the Golden State, citing the agency's determination that the vehicles are not safe for public operation and that the cars pose an unreasonable risk to the public. In a brief statement, the DMV added that it informed General Motors subsidiary that what steps it needed to apply and have the permits reinstated, but it did not explain what those precise entailed. While the autonomous operations are suspended, the DMV is allowing the company to continue to operate the car with a human safety driver. The suspension comes 1 week after the National Highway Traffic and Safety Administration said it was investigating the company following 2 incident reports of injuring pedestrians.
A Cruise spokesperson said in an emailed statement that the DMV is reviewing an October 2nd incident in San Francisco involving a hit-and-run accident where a woman was hit by a human-driven car and then thrown into the path of an oncoming Cruise autonomous vehicle, or AV.
I can't say that that's the autonomous vehicle's fault. I mean, they got blamed for it, though.
I wonder, though, the person that hit her, who's going to pay what for that one? She has 2 claims.
Yeah.
2 injury claims.
Anyway.
Cruise has been under pressure from local authorities to do a better job of interacting with first responders and pedestrians. This month, the company said it would modify its response times to detect emergency vehicles earlier.
Yeah. Since the California Public Utilities Commission August decision to allow Cruise and its primary rival Waymo to offer paid services 24 hours a day in San Francisco, Cruise cars have been involved in a number of incidents. These include seemingly not yielding to a fire truck en route to an emergency, getting stuck in wet concrete, and I actually saw that one on the internet. And it just drove right through a barrier into a fresh road of concrete, causing the traffic jam at a local music festival, and according to the San Francisco Fire Department, even briefly preventing an ambulance from leaving the scene of a different crash where the victim ultimately died after being brought to the hospital. But the fire department did say that it really wasn't the AV's fault that the person had passed away. Experts testifying before Congress had pointed out that there simply aren't enough tested miles to know just how safe these autonomous vehicles are. For now, Cruise only operates in San Francisco, Austin, and Phoenix, but is currently testing in 10 other cities, including San Diego, and Nashville. Analysts have previously said that the AV industry as a whole is expected to generate hundreds of billions of dollars of revenue before the end of the decade.
Or lose hundreds of billions in claims.
That's right.
I mean, that's ridiculous. So you can bet that Cruise's failure in San Francisco will make it much more difficult for others to get testing rights in other cities.
You bet. I mean, it's going to take hundreds of millions of miles to get the data right on these things.
I thought they were going to start out with just going around a block, like a busy block where they would stop and you could get in because you wanted to just go down 3 blocks, like you're in New York City and you don't want to walk anymore. I thought it was going to be just specific little routes that it would memorize and do the same route over and over and over again. I'm not hearing that in this article.
Well, it's going to take a lot more than just going around a block a few times to get all the bugs worked out. As a matter of fact, we saw one of these cars in Phoenix. We just got back from Phoenix earlier this week.
Wednesday.
And there was one of those autonomous cars. I originally said that car's a Google car, the one that maps the streets. Mm-hmm. But I was looking at this article and looking at the contraptions they had on the roof, and it's exactly what that car was. It was an autonomous car. It was pretty cool. Anyway.
cool until it runs over you.
You're right.
So why the shine has come off clean energy? What? Oh, yeah.
All right.
Right.
You've been listening to Your Money with Randy and Sherri Goss with Rosenberg Financial Group. And if you'd like to call in today to contribute to the show, the number is 478-742-0940. And Rosenberg Financial Group has offices in Macon and Warner Robins. And you can learn more about us by visiting our website, retireandrelax.com. We offer complimentary consultations, and setting up an appointment is easy. Just call our office, 478-922-8100. And we do offer free seminars to the community, so if you're looking for a guest speaker, give us a call and we'll discuss what topics you'd like for us to cover.
So why the shine has come off clean energy stocks? Clean energy stocks have fallen out of favor with pressures created by rising interest rates outweighing supportive government policies. The iShares Global Clean Energy ETF reached its lowest level since July 2020 this week. The ETF invests in renewable energy companies and utilities in line with benchmarks compiled by S&P Dow Jones indices, including First Solar and Plug Power. It has fallen 32% this year.
And some have fallen even harder. Enphase Energy has shed 64% in 2023, while competitor Solar Edge Technologies has sunk more than 70%. Excluding stocks that have been ejected from the S&P 500, Solar Edge ranks as the index's worst performer this year.
Supply chain problems and waning demand have added to the challenges created by higher borrowing costs. The result, a stock market sell-off despite commitments by the U.S. and other large economies to foster sustainable power generation. Simon Weber, a global equities portfolio manager, says the policy backdrop is very supportive, but there are headwinds. Clean tech is a very interest rate sensitive sector. He said the industry's long-term prospects were still good. I think this is a low point in the cycle, Weber added. And let's go to the phones. Good morning. You're on with Randy and Sherri.
Hey.
Good morning.
Good morning.
I got a question about a FICO score.
Oh, yeah. Go ahead.
Now, I only have one item on my that we have a payment on. It's a car. Well, about $11,000 on that. Credit cards. This time last year, I called you all. You all recommended me to get a credit card.
Mm-hmm.
Another credit card. I got that second credit card. My maximum balance on that was, they gave me $10,800. I pay it off every month.
Good. Yep.
And listen to this, it's up to $22,000 now.
The credit card?
Yeah.
That's not good.
Yeah. No.
His credit limit, not his
balance.
balance.
Your credit limit's up to that. You scared me for a second.
Yeah, the limit's up to $22,000. So I mean that's good.
Good. Yeah, your FICO score's got to be going up then. So do you know how to get to it?
Yeah. I know how to get to my FICO score. My FICO score is going down, but my TransUnion, my Experian, those are going up. They're up to 815, 817. But my FICO score, one month, I misjudged when I was supposed to pay the card off, and so I ended up with a balance that month. My FICO score went up 10 points that month.
Now, where are you getting your FICO score from?
I'm getting it from a paid service that I'm getting from ScoreSense.
Okay.
And I pay for that every month. It's $20 a month.
So I'm on the Experian website, Experian.com, and it says get your free credit report and FICO score. And it says get your free report and FICO score. Click here. No credit card required. I don't know what that's about.
Yeah, I've tried those, and it's a dark tunnel down to somebody trying to sell you something.
Ah, okay.
Yeah, there are different scoring models that exist. So I don't know this company what model they're using to give you your FICO score. But
I can, for example, the card I have is a Chase card, and I can see my on the Chase card I can see my TransUnion number on my Chase card, and it matches what's on ScoreSense, because ScoreSense gives me all three of them.
Yeah.
Okay. and I go to the Experian website, which is free, and I can pull up my FICO score on there as well as my Experian number on there. But the FICO score has gone from 817 down to 805.
Yeah, so mine is in the same category as yours, and mine does that all the time. It just goes back and forth. So as long as I'm staying, above 800, I'm very happy.
Go. So I'm on FICO. It says visit myfico.com/free and enter your information to check and monitor your FICO score for free. Have you been to that site?
I hadn't been to that one.
I hate for you to be paying for this stuff.
Yeah, the only one I pay for is ScoreSense, and it tracks, and that's the only one that I pay for. The rest of them, like Chase, it's free on Chase.
Okay.
My Chase card, it's free on there, and Experian website is free. I don't pay anything on that.
Right.
The only thing I've had for years is that ScoreSense, because I've always I got my credit got hacked one time.
Yeah.
And so I've always had this fear of that happening again or whatever else. And so so I track it.
But let me ask you a question. Are you do you know are you making the monthly payments on the credit card after you've added some things to it and then you're paying it off every month? Are you making that payment before the statement date?
Absolutely.
Okay, good.
Actually, I run a small business, and so what I do is I use that instead of using my debit card.
Yeah.
I use that, and then what I do is the Chase card will allow me to draw money from my debit card over to Chase to pay for it.
Gotcha.
And actually, I pay it several times a month. I mean, I may because I don't want to, I want to have that cushion all the time, so
right.
I'll spend $3,000 or $4,000 and I'll pay it, and I'll spend $3,000 or $4,000 and I pay it.
Yep, that's smart.
So,
that's what we do in the automotive garage too, because you don't want to get to the end of the month and have $25,000 worth of credit card bills staring at you.
No, last month I probably had maybe $20,000. But they, like I said, this is the second time they've raised my limit since I've had the card. And like I said, it's up to $22,000 now on that card. And I have, and then actually, I have a Bank of America credit card, and they've raised that limit on that card because we've changed. My wife kind of manages that one, and we've changed the process in which we want to make sure that balance at the closing date is always zero.
Yep. So you pay no interest.
Yeah. We haven't paid any interest on that Bank of America card for years. But
that's the best.
Yeah, but that was just a question why that FICO score is just bouncing around like a ball. But TransUnion, Experian, and Equifax, all of those are going up.
Yeah.
They continue, and I mean they're creeping up, a couple of points here or there as the loan. We have a loan on a car. As the loan on the car goes down, those numbers are creeping up a little bit at a time, and we could literally pay the car off, but I mean, in cash, but the interest rate is low on it because we bought it
very good.
In 2020.
Sounds fantastic.
Yeah, I don't think anything's wrong. I think your FICO score is going to bounce around. Mine does, and as long as it's staying on the right trajectory, you're good. Now, if it has a 30 point drop, between one reading and the next, then you might want to check into that. But just bumping around like that's not abnormal.
Okay.
Good.
Thank you all.
Hey.
You all do a wonderful job, and I appreciate everything that you all do for our community.
Thank you, and thanks for the call.
Yep,
this is great.
So
excellent. So we're talking about First Solar, Plug Power, Enphase Energy, clean energy stocks, and the fact that they're all going down in value. I'm going to skip you right there. Great. Supply chain problems and waning demand have added to the challenges created by higher borrowing costs. The result, a stock market sell-off despite commitments by the U.S. and other large economies to foster sustainable power generation. Simon Weber, a global equities portfolio manager, says the policy backdrop is very supportive, but there are headwinds. Clean tech is a very interest rate sensitive sector, he said. The industry's long-term prospects were still good. I think this is a low point in the cycle.
Yeah, and the Biden administration's Inflation Reduction Act of 2022 allocates close to $400 billion to clean energy development through direct funding and tax credits. This program has attracted more than $120 billion in project proposals.
Meanwhile, let's go back to the phones. Good morning. You're on with Randy and Sherri.
Good morning. How y'all doing?
We are great. How are you?
Doing pretty good. I just want to give y'all a little fair warning about the ticket. Somebody called you to pass that ticket.
Yeah.
Okay, y'all familiar with Westside High School?
I know, I've heard of it. I don't know exactly where it's located.
Okay, it's off of Heath Road, which is off Columbus Road and Thomason Road. And up the road, they got a middle school called Weaver School.
Okay.
They got 2 traffic cameras on that road. So and I got a ticket out of $100 at Central Atlanta, like y'all saying, it took my car. But if you don't have to, don't go on that road when school hours.
Yeah, or drive extremely slow if you do, right?
Well, I'm saying, if you obey the speed zone, but I'm just saying, just be familiar that Heath Road, Westside High School, and Weaver Road, they got 2 cameras at both schools on that road. It's about a 1.5-mile road. And go up that road, you possibly can get 2 tickets.
Oh, gee.
I'm just letting y'all know. It's off Columbus Road and Thomason Road.
Well, I appreciate that. That's good intel for the
Because, in fact, we're headed toward peak after the radio show.
Yeah.
We'll have to look at this.
Yes, we will.
Yeah. Thank you so much for your tip. Appreciate you.
All right. I think he's already gone.
Where am I?
Meanwhile, the European Union is also attempting to build up its ability to generate homegrown energy and reduce its dependence on natural gas imports. The EU learned a tough lesson from the disrupted Russian supplies following the Ukraine invasion. The bloc's lawmakers passed a bill last month that boosted the renewable energy targets for 2030.
The clean energy sector broadly falls into 2 categories: companies that make or deploy capital-intensive infrastructure, such as wind turbines or solar panels, and those that are developing a new technology. Both groups come under pressure from high interest rates. And good morning. You're on with Randy and Sherri.
Good morning.
Hello.
Good morning.
This is your cousin. I got so many things to talk about. We might need another show.
Okay, well, let's
Take
see.
it away.
What do you think? Can we do this, Neil?
Listen, on the auto strikes, that's going to cost every one of us.
Absolutely.
And they're going to pass and why are they picking on just the 3 major American automakers? Man, Toyota and Lexus and Nissan and them, they laughing their way to the bank.
Right. Their prices are going to be lower. I love how they stopped building engines. That really helps.
And it is absolutely terrible. And then green energies ain't green, number one. Well, we'll just cut all that short. But anyhow, it's a major league ripoff, but it's a way to tax us again. But the thing about it is on these speeding tickets in these school zones, you can go back to take Occam's razor theory about things. And they've got tags now covers that you can put over your tags that will deflect that. It's transparent, but it deflects the light. Okay, and they can't read your tag number. However, going back to Occam's razor, the simplest thing to do for all your listeners, and I think we all eat bananas every now and then, you can take your banana peel and rub it on your tag, and the potassium in it will keep that camera from reading your tag number. Now, I'm a victim of 2 of those tickets myself. Same day.
It's funny. We were all giving Sherri a hard time in the office and for the ticket that she got. And we were on the way to the gym, and Jonathan calls me and says, "Hey, guess what?" He goes, "I got a ticket in the same place at almost the exact same time, at the same day." It was fantastic. So
and it's a money game.
It is.
Because they don't put it against your driving record.
That's right.
It's all a money game.
That's all it is.
And that's all. I've talked to a couple of county commissioners, and I told them what they need to do is like out at Macon College, put those tabletop risers to warn you that you're needing to slow down a little bit. And their excuse is, well, the ambulance drivers might throw somebody off of the thing in the ambulance, if they go over it too fast and don't slow down.
Yeah.
That's a really poor excuse, But they should put those tabletop risers that are about 4 or 5 feet wide across not the little bitty speed bumps, but it would let you know that you need to slow down. But they, with all the money they're getting, they ought to be able to afford those things in all of the school. Like out on Skipper Road, the school out there is 500 feet from the doggone road.
That's the way the one was in Thomason where it got me.
Yep.
It's just a money grab.
It's a racket.
And they're going to be everywhere. I was talking to Randy the other day about it. They're not only going to be in front of every school. I think the churches are going to start using them on Sundays when they have service, people coming for service and people leaving service. I can see that being the next phase of this because they're making so much money off of these things. It's crazy.
They're going to have it on all your causeways, your like 247 or Interstate 75 eventually. This is just a prelude to them taking away our freedoms.
Well, when we were living in Spain, you could be going under a bridge and doing kind of fast, and you'll see a bright flash. And I mean, those were built into the bridge infrastructure, and you get a ticket in the mail just like we get now with the ones in the school zones.
But yeah, it was 20 years ago.
They were doing that in Virginia several years back. Yeah, going into the D.C. area. Yeah, but anyhow. They're just that's another way to take away our freedoms and dip into our pocketbooks.
Agreed.
Well, I don't know what to say other than I'm going to slow down.
Get your banana peel out.
Right.
All right. Love y'all.
Thank you, man.
All right, later, man. Bye.
Bye. Have a good one. Where are we? Anyways, so renewables projects typically need a lot of upfront funding to buy equipment such as solar panels and wind turbines, which I think are a joke, just as a side note, which is then repaid over time by electricity sales. As much as 80% of such projects are financed by debt, according to a 2020 U.S. government report. Pricier loans eat into projects' expected returns, making it less attractive to embark on new developments. Rising rates also hurt riskier investments, such as clean energy technologies. Good morning. You're on with Randy and Sherri.
Good morning.
Hey.
Hello.
Hey, I'm trying to get this thing turned down.
You're good.
I was calling in to say something. I got a question, but I was going to say something about those tickets, too.
Okay.
On the tickets, I used to work for a private police agency, and I got one of those tickets at a place where I stopped at the top of a hill and just let my car roll down, and it rose above the speed zone, so I had to put on just by itself. But one of our officers got a ticket over there for responding to a call, and he called the city of Macon about it, and they said they didn't know how to handle those tickets.
Oh,
really?
Gee. What about ambulances?
Well, yeah, I guess ambulances got out. Now, we were at a private police place, so that may be why they said, at first they said they couldn't do anything about the ticket. But anyhow, they took away the ticket because he was responding to a legitimate call. But I know that may have changed, but they didn't have a court set up to handle them. And I know there's something in the Constitution somewhere about, or in law, that says you have to be able to face your accusers.
And that's why they started putting the local law enforcement signature on these tickets, so they will show up in court if they're forced.
Okay. So I don't know. I know mine, like I said, my car started, and I had a little car. My car started rolling down the hill, but I was testing it, and it got faster. It went over the speed limit, just rolling down without me pressing the gas.
Yep.
But I got one question.
What you got?
Is there a way to give somebody, say, several $1,000s without you, and you can claim it on your taxes, so you won't have to pay taxes, or they don't have to claim it, so they have to pay taxes?
So you're talking about a gift, right?
Yeah, not a death thing, or
right,
state or anything.
So I'd have to look it back up. 2023, I believe the gift tax limit is $17,000. You might have it in your binder. But anyways, it increases every year a little bit, so you can look it up. And that's the amount that you can give to any number of people that you want without having to claim it on your tax return or claiming it anywhere. And because it's under the limit, the person that you give it to doesn't have to claim it as a gift either. So you can just, you can just do it. So if you want to email me, Sherri at rfmoney.com, it's Sherri. I can verify the 2023 gift tax limit, but I want to say it's 17 grand.
I think.
Okay.
But call us at the office next week, and we'll give you a...
or shoot me an email.
Yeah, an email.
Yeah.
So,
okay.
Yeah.
Well, thanks for the call.
I love your show.
Thank you. Have a great day.
How are we doing on time, Neil?
Coming up on 1 minute.
Okay, perfect.
All right, well, we'll just go ahead and end it then. Anyway, thanks for listening to Your Money, everyone. It's produced by Rosenberg Financial Group, and as financial advisors, the main thing that we do is provide retirement planning advice and manage our clients' investment accounts. And if you're looking for a financial advisor, please contact our office to set up a complimentary consultation. We'll get you set up with Sherri or Jonathan, and our office number is 478-922-8100, and you can learn more about us by visiting our website, retirerelax.com. And if you have questions or a topic you'd like for us to cover in next week's broadcast, email me at randy@rfmoney.com, and we will connect with you next week on these topics. So what else you got, Sherri? We got a couple of seconds left.
Ooh, I should talk about that cyber seminar again. So once again, Houston Healthcare is putting on a cybersecurity awareness forum on November 16th at 6:30 p.m. at the Carrie Martin Conference Center, which is the old mall where Houston Healthcare. So 233 North Houston Road in Warner Robins. You don't have to sign up. You can just show up. They want as many people to come out as possible to learn about how to be more cyber secure. And this affects everybody,
never know too much,
from teenagers to senior citizens. Anyways, with that, I hope you have a great weekend.
Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Osaic Wealth is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Osaic Wealth.